So good morning and welcome to our virtual session for Conserving Land by Staying Connected, the ins and outs of restricted gifts. Happy Earth Week, everyone. I hope you get some time to enjoy outside as well as, of course, protecting it and doing all the great promotions around Earth Day and Earth Week. For those of you who don't know me, I think most of you do, but for those who don't, my name is Rebecca Dahl. I'm the program manager for CLCC, and I'm just really glad to have you all here today and this morning. I'm going to go ahead and hand it over to our lovely presenters this morning, Amanda Branson, Rick Newton, and Ann Westerman. So take it away.
Great. Thank you, Rebecca. And thank you all for joining us this early Monday morning. So just to be sure everybody's in the right place, we're going to be talking about restricted gifts this morning. And we are talking about restricted gifts of dollars, not restricted gifts of land. So what we're going to do is our goal for the workshop is really to share our experience. Each of us represents an accredited land trust, and so we want to share our experience with you in negotiating and documenting restrictions, business systems, and accounting practices, and we will talk about endowments, but we'll keep that to a pretty high-level discussion. And so our agenda for the day is our introductions. We also have a few polls for you to do, just so we can understand who is in the room with us here this morning. We'll do some defined terms, an overview of accounting and accreditation with regard to restricted gifts, major gift policy, donor forms, and other kinds of policy matters. And then we'll talk about restricted asset tracking systems, spending rules, and endowments. And then we will hopefully have plenty of time for your questions. So Rebecca, if you could go ahead and launch these polls. We have a series of 4 questions for each of you to answer. One is on accreditation, one is on your role with regard to accounting, and who does day-to-day bookkeeping at your land trust and your level of financial statements. And so, okay, this is really helpful. So I'm going to go ahead, and as these are, as we have these polls going, we'll do our a couple of quick disclaimers, and then we'll do our introduction of our presenters as we're going through these polls. So as far as disclaimers go, I'm sure you've all heard this before. We are sharing our experience in our roles with our land trust, but we are not attorneys and we are not accountants. So if you have questions specific to your policy and what your organization should do, you should refer to your CPA, your auditor if you have one, and your legal counsel. Okay, this is great. So we can go to the next poll, Rebecca. And the other thing, of course, as far as accreditation goes, if you have questions about accreditation, the Accreditation Commission is the best place to go. They want you to get accredited. Most of you, it looked like, had been through the accreditation process, so you all know how helpful the Accreditation Commission can be. So I'll introduce myself. I'm Amanda Branson. I am Director of Operations and Finance for Northwest Connecticut Land Conservancy. So in my, for those of you who don't know about Northwest Connecticut Land Conservancy, it was formed through a merger of Naromi Land Trust. I was Executive Director of Naromi Land Trust, and in June of 2020, we merged with Wiantanog Heritage Land Trust. At that time, Wiantanog changed its name to Northwest Connecticut Land Conservancy. And just to give you a little snapshot of our organization, we have 7 full-time employees and then a handful of part-time employees. We're a regional land trust. It covers all of Litchfield County and northern Fairfield counties. We have protected over 12,500 acres and that's broken up into 282 fee properties, 215 conservation easements, and within those, that includes 21 public preserves and 40 working farms. And to give you a sense of our financial operating budget, for 2021, we have a $1.2 million budget. So I'm going to advance to Rick, and then Rick can do his introduction while you do the next poll for us, Rebecca, if that would work. Rick, why don't you go ahead?
Okay, good morning. Currently, I'm the treasurer of the Connecticut Land Conservation Council. I'm involved with Avalonia. I used to be treasurer, vice president, board member of Avalonia, and I currently serve on the Development, Stewardship, and Stonington Town Committee. Avalonia has one full-time and one part-time employee. We're a regional land trust in New London County, and we also own 2 islands in Long Island Sound. We were established in 1968. We have about 110 parcels. Most of them are fee-owned. About 4,400 acres of land protected, and our operating budget for 2021 is $192,000. And we have many, many restricted gifts and grants.
Okay, that's great. I'm trying to advance to you, Ann.
That's okay. Well, I think I know the data, so let me just jump in. I'm Ann Westerman. I'm on the board of Flanders Nature Center and Land Trust. We're located in Woodbury, and as a land trust, we're regional in nature. We started as Woodbury's Land Trust. We certainly have properties that cross borders into Middlebury, Bethlehem, Southbury. I am on the board. I was board president for 10 years until recently, and I serve on the finance committee, which is part of the reason I'm here. I have dealt with our restricted funds, and I'll explain why I said it that way a little later. We have, as a land trust, 2,400 acres, and that's about 50 properties, of which 15 are conservation easements. We are also a full-scale nature center, and that is growing rapidly. So we have a budget of about $600,000 for full-time employees, a few more part-time for the back office and education pieces, and then a whole bunch of seasonal employees for summer camp and so forth. I think that's a pretty good introduction.
That's great. Yeah, so this is our last poll, just so we understand what level of financial statements you have. And then Ann's going to go into talking about defined terms.
Okay.
All right, this is great.
Yep, very helpful.
All right, fantastic.
So it looks like I'm going to be able to go through defined terms really quickly. If people have audits, they know what I'm talking about.
There's a good amount of knowledge in the room. That's fantastic.
Yeah.
When we tested, advancing was no problem, and now.
Well, the poll is still up.
Oh, okay. So we're all set with the poll.
Yes, I have been.
Okay, so we can, if you do see the poll box still up, feel free to X that out. I have stopped sharing, so that should help.
Yeah, this is as bad as your slides not working.
Okay. Here, we'll go right into this. see if I can get back. All right.
There we go.
There we go.
So, again, I just wanted to say good morning, and I'm introduced myself as a board member, and as a board member, we all receive a packet before our meeting each month, and the third item in there is probably your budget versus actual, and we look at money in, money out, and move on to other more interesting business. But as a board member, we're also responsible for the rest of the balance sheet assets, obviously the land, the buildings, the equipment. We may be lucky enough to have a fund of invested money to support our mission, to support the lands that we've protected. And we may very well have funds that have been entrusted to us to deliver our mission, whether those are scholarships and grants or potentially endowment type money. Question is, are they restricted? And that's our job to document and be aware of. So define terms, starting with restrictions. These may be very basic, but if you don't understand these, we can't really spend the time that we need to on the rest of it. So a restriction is determined by the donor when they make the gift, and it is restricted to use for a certain purpose or period of time. There's a term, board designated, which often gets confused with restricted, but it actually falls within the unrestricted category. The board has the ability to designate funds to support its mission, but from an accounting point of view, it's not an actual restriction because it can be reversed by the board. But it is a very good tool to fulfill one's fiduciary obligation to financially support. Cash method versus accrual method. This is the choice of the land trust. We are allowed to do either one, but as you move toward GAAP accounting, accrual method is the way to go. It's all about recognition of the timing of income and expenses. Board accountability means that the board is responsible for the reports and what they say about our land trust. So that's why we look at financial reports. I'll look at that in a new slide. When we get to the end of the year, we pull all our data together and we create either a compilation of our financial reports, and we may hire a CPA to do a review of those, and we may be required at a certain dollar amount to have an audit by that CPA. What I found is that the audit, then we are required as a nonprofit to file a federal Form 990, and that is really the basis of retaining our nonprofit status. So it's an important, very complicated forms, why the auditors or CPAs usually do it for us. What I've learned about these last two reports is that they ask questions about restricted funds in both. So it's incredibly important. Moving on to the term endowment. This is really important. This is the endowment with a big E. The donors give funds or other assets to be maintained in perpetuity as investments for the benefit of the organization. Endowment funds may not be spent, and generally the earnings from these gifts are unrestricted. And we'll spend much more time talking about different uses of that term. Next slide. Why do we care about restricted funds? I've talked about we're required to for various accounting policies. It's a very important aspect of our nonprofit status, but also accreditation tells us we must. And that comes out of the Land Trust Alliance Accreditation Requirements Manual. That's a document you can go to, and it tells you very specifically the questions that will be asked when you apply. One of those questions is just, if you haven't heard of it before, the Terra Firma Calculator is a tool that is offered as part of the accreditation process to determine how much we should have in the way of a reserve for legal defense in case of issues with a neighbor on a fee property or a landowner on easement property. And this tool is very helpful for giving you a good sense of how much you should have in reserve. These are back to the list of financial reports that you're, again, very used to seeing. We see the budget versus actual probably every month. If the profit and loss statement includes a little bit more in the way of investments, that also might be called an income statement or a statement of activities, depending on your accounting software. That report may include gifts and expenses that are outside of the operating budget, whether they are special projects or it would eventually list funds that are released from restriction, as in they've been spent for their intended purpose. The balance sheet is otherwise known as the statement of financial position. And that is where all of our assets are listed, and restricted funds are identified within that very clearly. Next slide. I just have one more demonstration on the balance sheet. This was a really helpful way for me to look at relative to restrictions. These are the categories that are listed on the balance sheet. I have them listed here from the most restricted to the least restricted. So perpetual restrictions are exactly what they say. That's your real endowment. Some of your land assets may show up as perpetual or unrestricted. We're not really going to talk about that here. I'm just saying it would show up on your balance sheet. Restrictions as to purpose or time, but that can be spent, would be listed there. We used to call that temporarily restricted, but I believe there are different terms for that now. Board designated is one where we feel like we've set money aside for the purpose, but it's done by the board. So it actually is a category within unrestricted, and then our operating funds, our checking accounts and so forth. I think that's all we have on basic terms. Rick has some details.
Okay, why do we do this and who makes the rules? The Financial Accounting Standards Board determines what are generally accepted accounting principles, which is GAAP. The Standards Board is made up of only 7 people from academia, business, and the general public who are users of financial statements. They are appointed by the trustees of the FASB Board to 5-year terms that can be extended for another 5 years. They must sever all ties to the institutions they were associated with prior to being appointed. For years, they created statements of financial accounting standards, and the 4 that are nonprofits are governed by are listed there. There hasn't been a new standard written since 2009. Now they issue accounting standard updates to the existing rules. And the 4 most recent ones are listed there, or the three most recent ones that are applied to nonprofits are listed there. So those 2 standards and updates are now incorporated in what they call the accounting standards codification. And they're combined, and they use both for guidance documents. Your accountant and auditors, when they review your financial records, they determine whether you conform to GAAP. If you don't conform to GAAP, then you'll get a qualified audit, and it'll state the reasons why. Land trust standards and practices generally want you to use GAAP, but they do permit another GAAP treatment, other than GAAP treatment, if an expert determines it is needed. The LTA Commission, Accreditation Commission, would like land trust to use GAAP, but it's not an indicator element for accreditation, nor is it a terra firma enrollment requirement. Connecticut Attorney General's Office is a good resource, and the important thing here to remember is to keep detailed records of everything. Next slide. So as far as standards and practices, indicator elements, 5B3 pretty much says you need a financial system to comply with any donor restrictions on gifts. They don't care what kind of system it is. Probably QuickBooks is probably the most popular, but if you go on Google for software packages for nonprofits, there are like 40 or 50 of them that come up that are available to use. A small land trust might be able to get away with just using a Excel spreadsheet. The important point is that your land trust needs to have some kind of system. Next slide. Board oversight. The board is required to review financial reports periodically throughout the year that shows the different categories of restrictions and revenue versus expenses in a level of detail that is appropriate to your land trust. If you don't have a lot of activity and don't have a lot of restricted gifts, you may be able to get away with doing this once or twice a year. Other land trusts may have to do this monthly. They don't define what periodically means, what it is. So it's up to the land trust and the board to decide what to do. As far as gift acknowledgement, you need to make sure that any donor money coming in that's restricted is properly classified, tracked, and used according to the restrictions that come in. Receipt of funds, and when you receive funds that are restricted, you should put it in your acknowledgement letter that you acknowledge the restriction on the funds. Next slide. As far as audits and reviewing financial records, and the land trust board is required to do a review of them. In the white areas are the LTA requirements, and they've changed a little bit. The last one, they're pretty much requiring most land trusts to get at minimum a compilation. If you have donations less than $250,000 a year by an independent qualified accountant. You should also note that the LTA requirements differ from the state and federal requirements. Federal, if you get 750 grand in federal funds in any given year, then you need a federal audit. The state, gross revenue greater than 500,000, you must file an audited financial statement prepared by an independent CPA. But note that the state law, gross revenue excludes grants from government agencies or revenue from funds held in trust for the benefit of the organization. A single state audit is required when you get $300,000 or more in Connecticut financial assistance, and this is most commonly open space grants. Once you get into the single state audit arena, you'll be getting additional documents that you have to fill out. The OPM office will be sending you a request to declare who your auditor is 30 days prior to the end of your fiscal year being audited. So if most of us end on December 31st, so by December 2nd, you have to send in a letter telling who your auditor is going to be. If you receive a letter from OPM but aren't required to have an audit, you have 60 days from the fiscal year end to file an exemption letter. The accounting firm must have an active permit, and that's responsibility of the land trust to ensure that they do. And the single state audit report is due 6 months after the fiscal year ends. So if you end in December, you have to have your single state audit in by the end of June. Next slide, please. Beginning in 2018, the IRS changed things to make things a little bit easier. We used to have three types of funds. unrestricted, temporarily restricted, and permanently restricted. Now there are only two categories as far as the IRS is concerned, without donor restrictions and with donor restrictions. The LTA Accreditation Commission breaks these two categories down into four categories. Without donor restrictions are undesignated and board designated, and with donor restrictions are restricted by time or purpose and perpetual. It's recommended that you have a gift acceptance policy that designates who can accept gifts and determine what level of restriction is on the gifts. Next slide. This is just a snapshot that shows when different changes were made in the recent years from 2018 to 2020. And a cautionary note that when you're looking for information, either on LTA's website or on the internet, it's very easy to come across outdated information. A lot of the LTA curriculum books haven't been updated recently, so they are becoming outdated as changes progress in the accounting systems. So just be aware of what you're looking at to make sure you have the most current information. Next slide, please. These next two slides are just showing where on financial statements these restrictions are shown. This is the statement of financial position balance sheet for CLCC. In the net asset area, it shows without donor restrictions and with donor restrictions. If there were board designated restrictions, you have the option of showing it either in this area of the balance sheet, or they can do it in the footnotes to the financial statements, which is, I think, a fairly common occurrence that the auditors prefer to use footnotes, but it's really up to your auditor and what your board wants. Next slide, please. This is a statement of activities or the income statement. And what this shows is that when a grant that has restrictions is completed and there's money left over in the grant organization doesn't want the money back, it ends up being a surplus. And so it's released from restrictions down the lower section. You can see $17,000 being negative $17,000 being released, and then it goes up into the upper area where it shows the release, and it becomes unrestricted money for the land trust to use. Next slide, please. This form, if you're going for accreditation or reaccreditation, you become familiar with it. It's the form they want you to fill out that details your restricted funds. It's due at the time of pre-application, not the application, and the total should agree with your audited financial statements. What it shows is across the top over here are the four categories that the LTA wants to see. Without donor restrictions are unrestricted, board designated, and then with donor restrictions, restricted by time or purpose, and perpetual. Then on the left, the four broad categories that they think that land trusts may have restricted funds in. You may not have restricted funds in all these different categories. And then there's a grouping for each fund, and then description, use of money, how it can be released, things like all the details that they want to see there. And then on the right, you can put in additional notes. Next slide, please. This is an example from the LTA website, and you can go through this later. It's kind of hard to see on the screen here, but it's an example of one of their funds and how it's broken up into 3 different categories, and the restrictions on it and uses of it. Next slide, please. IRS form 990 shows up in part X of the balance sheet, and it's just a simple 2 lines without donor restrictions and with donor restrictions. I don't believe that the 990 EZ or and I know the 990N postcard filing don't have any place to, they don't require that you show these 2 different, the breakout of these 2 different categories of funds. Next slide, please. Board designated net assets. You must describe the amount and purpose of each board designated net asset. It's a good idea to have a board policy before you start designating, before your board starts designating assets. Board designations are not restrictions. And as I said previously, they can be shown either in the balance sheet or in the financial statements. Revenue recognition changed in 2019. There were multiple changes, but the one that applies to restricted gifts, conditional contributions are recognized when a condition is met. So if you get a grant that says, we'll give you $100,000 if you raise $400,000 to buy a piece of property, until you raise that $400,000, the $100,000 is not recognized as a contribution. The foundation grant's conditional and can't be recorded as income until the condition is met. Next slide, please. Cash accounts. I know that when Avalonia first started, they had a zillion accounts at I think 3 or 4 different banks to keep track of restricted funds. There's no requirement to do so. It's not recommended that you do so. It's time consuming, and you're eventually going to have errors in moving funds between different accounts. You should use a financial accounting system to track net assets that have donor restrictions on them. Unrestricted cash is I found was an important number when I was treasurer of Avalonia. We were in the unfortunate position that we had an outside bookkeeper, and the QuickBooks reports weren't very timely for us. So I developed a spreadsheet that I could calculate what our unrestricted cash was, because we were very active and we have a whole lot of grants, both for acquisition and for stewardship that were coming in. So if you're a board member and you ask, your treasurer, what's our balance of our checking accounts and our available money in all our accounts, and you see up here at the top that this is just an hypothetical example, but it shows $465,000. You think, well, okay, well, I don't have to pay much attention to it because we've got almost $500,000 in the bank. But then you go and start looking at restrictions. There's $350,000 that are restricted for, that was donated or grants came in for different property acquisitions. And then for stewardship costs, we find it's fairly easy to get Rotary Club and Garden Club grants, but they all come with restrictions. Or most of them do. And so you have to keep track of the balance of those. And when you get down to nuts and bolts, your unrestricted cash balance is really only $74,000. According to what the LTA wants you to have in operating reserve, that's another $26,000. So you only have $48,000 in reserve. And then over here on the right is just a backup spreadsheet where each one of these lines I kept track of by when the grant came in and when money went out, and what the balance was. So that's just one way of doing it. If you have a bookkeeper on staff and your QuickBooks is up to date every month, you can use that. But you definitely need to know what your unrestricted cash is, and you may even have to do a cash analysis for monthly going forward, because most of our land trust, I believe, the revenue coming in is end loaded for the fourth quarter of the calendar year, or fourth quarter and first quarter of the following year. So in the summertime, available cash, if you're playing it close, if you don't have a overwhelmingly amount of reserves that are available, you could be getting close to dipping into restricted funds. And that you never want to do. If your board inadvertently uses restricted cash by accident, you can probably fix that with little or no consequences. If your board intentionally uses restricted funds, the consequences could be severe. Individual board members could be personally liable because your D&O insurance won't cover you when you willfully use restricted funds. And the severest extent could be that the land trust could lose their nonprofit status. So you never want to use restricted funds for their unintended purposes. Next slide. A note on releasing if you have dormant restricted funds. I had a conversation a few months ago with the Assistant Attorney General. State statute says that a court must decide what to do with dormant restricted funds, but the AG's office does have some discretionary latitude as to whether to send a request to a court. If it's a relatively small amount of money and it's impossible to track down the donors to get the permission to use the money for other like purposes, you can send information to the Attorney General office and they'll make a ruling as to whether they want to take it to court, or whether in some cases they can give you a no contest letter to the nonprofit stating that they have no issue with you moving the funds for additional purposes of the land trust. Next slide, please. Can a donor get money back? Most cases, no. Once a donor gives a gift to the land trust or a nonprofit, they give up all rights to the money. Unless the donor specifically retain the power to enforce restrictions on the use of the gift, they have no right other than complain about it. They can go to the Attorney General, but the Attorney General typically is the only person who has standing to enforce the terms of the gift. Next slide, please. We were asked to talk a little bit about investing. Yes, a nonprofit can invest funds they have. And of course, there are state laws that govern everything we do. There's a state law that talks about the duty of loyalty, and it also states that you shall manage the funds in good faith with what a prudent person in a like position would do. So remember, it's donor money that you are investing, and restrictions do not go away when it's invested. It's a good idea to have an investment policy in place prior to investing donor funds. And I think that's it for me.
Great. Wow, I've been taking notes here, Rick. Thank you. Yes, investment policy. That's one of the important policies that we put together as board members. And another one that I wanted to just jump in and describe quickly would be what Flanders calls a major gift policy. But we have talked here about a gift acceptance policy. I think that might be what accreditation refers to it as. And basically, our organizations need these long-term funds, preferably invested to create sustainability for our organization. And we definitely go out and look for those. And the answer to the success is being true to the restrictions by documenting them as they come in, ideally. So documenting donor restrictions, obviously, if we run a capital campaign to raise endowment funds, then the solicitation materials should specify permanent or perpetual restriction, or not. It could be that it's for a project or something like that, in which case it's restricted, but more to time or purpose, right? So it's the documentation on the campaign will determine and document the restrictions on any gift that comes in for that campaign. If a big check comes in every once in a while, we love to receive those. If there are no restrictions in writing, depending on the size of the gift, we might pick up the phone and say, did you mean for this to be restricted? Just to be absolutely clear. And again, our policy creates a form that can be documented. And I just wanted to say that at Flanders, like our partner organizations here, is almost 60 years old. And back in the day, we were very nicely supported by our founding members. And so when money went into our endowment fund, and it was my work probably 10, 15 years ago to go back through and say, which of these funds are truly restricted? Do I have the letters where they were restricting the money, or was it in fact received unrestricted? And if it was to purpose, the board had to cover it and designate those funds, which, as we've learned, is not permanently restricted or in fact restricted at all. Next slide. This is a picture of the 2-page form that we have available. It is the appendix to our major gift policy. And you can just sort of look at that, not easy to read, but you'll see as I list the purposes of the policy. One is to define a major gift. That's going to be different for any organizations of different sizes in different parts of the state and so forth. But it differentiates a major gift from our normal income sources of memberships and annual gifts and even sustaining gifts, right? They're the one-time gifts that come in to really enhance our funding. The board has the responsibility to accept or reject any restricted gift. That's the most important, probably, for our purposes today, that this policy does. Our policy also addresses recognition. If it's a memorial gift or an in-kind gift, it addresses those things. As you can see here, we do encourage major gift donors to choose a fund to put it into. Is this for land stewardship purposes? Is it to allow us to buy the next great property? Or is it in fact for our education purposes at Flanders? So it decides that. And then you'll see on the second page, for a donation of $20,000 or more, donors can actually establish a named fund. And now you're starting to get into fund accounting, and it gets kind of complex. We don't really want to encourage that, but for a big enough gift. And we had to decide what that break point would be, where we would consider a separate fund. I can take any questions on that one. I'm not even going to address the second one because Rick already talked about conditional gifts. Nope, I'm sorry, you can go to the next slide. But the special cases related to capital campaign was just, I don't think it's been mentioned. Again, when you put your solicitation materials together, it's a good idea to leave an escape clause. So you define exactly what you're raising money for. If it is for perpetual restriction, you specify the amount that you're raising for that purpose. And then if you happen to raise in excess of that, the remainder can be in a less restricted, shall we say, a more restricted to purpose type portion of that fund. Or if you are raising money to purchase a property, the purchase price of the property is the primary. The escape clause might say anything extra we raise would be for stewardship of that property or all of our properties. It's all in how you write it. That's how you create the documentation. Okay, Amanda.
I'm muting. Great, thank you guys. Oh, now I can't advance again. There we go. All right, so I'm going to talk a bit about, I'll first talk about our internal systems for when we receive restricted gifts and grants, and just some things to keep on your mental checklist around what to do as you're receiving these. So it's incredibly important to make sure that you are clearly communicating that you have received restricted funds to everyone that needs to know in your organization. So that's going to depend on the size of your organization, and sometimes it's going to depend on the specifics of the restricted funds. So usually you're going to need to make sure that your treasurer knows about it, a bookkeeper and a CPA. If you have a staff, the executive director will need to know about it. And certainly if it's a purpose-restricted gift that your stewardship team needs to know about, make sure that they know and that your organization can fulfill whatever the restriction is on the funds. And as we've all been saying over and over again, it's really important to have clear documentation of the restriction. And as you're looking at that documentation, so evaluate whether it is sufficient to substantiate the restriction for your needs in terms of the future management and for audit purposes. And if as you are looking at that documentation, you don't think it's sufficient, it's a great idea to check in with your CPA or your auditor, and if you don't have it, try to get it in a timely manner. It's much harder to put these things together after the fact, as Anne alluded to, in terms of looking through historical documentation and trying to figure out what the restriction is. And then it's a good idea to check in if you have a gift acceptance policy, to check in to make sure you're following your own internal board-adopted policies. And in terms of an internal system to track it, it can be really efficient and easy to set up your chart of accounts in QuickBooks or whatever software you use to help you to streamline the tracking both of income and expenses. And I'll show you here, this is a report that I pulled out of NCLC's QuickBooks about restricted contributions. The blacked out portion is just to protect the privacy of the donors, but you can see here that we have an accounting line that is just for restricted contributions. And then underneath that, we have subcategories. And because we regularly receive contributions to our Stewardship Reserve Fund, so that's the fund where we keep like the minimum requirements for terra firma and accreditation, and these are the gifts that we very regularly will receive as a part of an acquisition project. So we're receiving income to that fund with some regularity, so we set up a sub-account under restricted contributions so that we can easily pull out a report to reflect that. And then we also will receive sometimes sort of one-off restricted contributions that it doesn't really make sense to set up a subcategory for each individual restricted contribution that you get. And so we have a sort of a catch-all category there. But it makes it very easy to go in and pull a report that then can be used for our internal financial reports that we present to the board, and for our auditor when it comes time to go through that process. And then I thought it would be helpful to go through the way that we track a restricted gift for purpose. So what I chose to show to all of you here is a grant that we got from Connecticut Community Foundation. Many of you may have heard about this program that we have where we hire summer interns and they do some work for NCLC, but they also do some work for our partners. And so what we have here is we have an accounting category for restricted grant expenses. And then because this is a program that we're about to enter our third year of this program, we have it as its own subcategory. And then we have the different kinds of expenses that we anticipate getting as a part of our chart of accounts. And then as things come in, we can use our internal controls and coding invoices to help us track as expenses come in. Okay, this expense is going to be counted towards this grant. And then we can stay on top of any of the reporting requirements that we may have for the grant by handling these things and coding them in real time. Then the reporting is pretty easy to pull out. So this is our summary of our restricted net assets at our year end. So I've removed some of the funding information here, but what this does is it shows you a really high-level summary of what we do at the end of the year to supply to our auditor. And so each of these lines has its own worksheet, which describes the specific information. So I included in here our stewardship reserve and that Connecticut Community Foundation grant. So what the summary version of this includes what the balance was on that particular gift or restricted fund on the last day of 2019. And then we have the additions in one column, the releases, and then our balance at the end of the 2020 year. So you can see for the Connecticut Community Foundation grant, we received those funds in December of 2019, but the program was a 2020 program. So the additions to that gift and the releases from that gift are included here, and then here's our balance at the end of the year. And this can be a really, really helpful schedule to have to both show to the board, but also to the auditor to give a summary of what the restricted funds are. And this is showing the actual detail of that Connecticut Community Foundation grant. So I showed you the QuickBooks report that is just which was just the expenditures, but this is the whole detail report for that grant project. So we have our income up here. So the funds actually came in December of 2019. So we show the balance here. The other partner organizations that participated in that program made a small contribution to the program as a participation fee. Here are the direct expenditures out of QuickBooks. The majority of that program, as I mentioned, it's a shared intern program. So the majority of that was to cover the wages, Social Security, and unemployment tax for the intern. So that appears here. And then we had a small amount to cover the staff time to coordinate the project. So you can see that the whole grant was spent down in 2020. So this gives, in a very simple presentation, it gives a full picture of this restricted grant that was specified to time, to purpose. So then I wanted to talk a bit about our Stewardship Reserve Fund. And this is an example of a fund that, for NCLC at least, it is made up of a combination of board-restricted funds, and then true restricted funds in that it was restricted by the donor. So in our financial management and control policy, it allows for a spending rule. So a spending rule is a particular term that refers to looking at the end of the year, what portion can be released from restriction. So in our policy, we talk about what the specific rules are around that. So we can use up to 3 to 5% of the average value of the assets to defray the expenses of easement and fee land stewardship, enforcement, defense, and monitoring. So again, when you have these policies in place, it's really important to refer to them and make sure that your actual practice is consistent with your policy. So our process for the spending rule for our stewardship reserve fund is that, as I said just a moment ago, it is made up of donor-restricted funds and board-designated funds. The spending rule really only applies to the donor-designated funds, the true restricted funds, because as we've said, the board-restricted funds are not part of the restriction for accounting purposes. And for us, our CPA calculates the spending rule at the end of the year. It is then presented to our finance committee. The finance committee reviews it and will make a formal recommendation to the board to approve the spending rule release. And then at a subsequent board meeting, the board can approve the spending rule release. And the release represents a release from the restriction. It's not always an actual restriction of funds, or excuse me, an actual transfer of funds. And it can be really important to go through this process. Sometimes, of course, our organizations will need those funds, so you may want to release them from restriction to be used for the purpose that the restriction designates. But in some years, we may not need to do that. It's still a great idea to go through that process, both to keep the process consistent year to year. This is what our practice is as an organization. We do this each year. But it can also be advisable to do that because carrying restricted funds over the long term can sometimes it can prevent us from using the funds when we need them, and if we have kept them restricted longer than we have to, we can be tying our own hands. I mean, I've certainly heard of organizations who have, because they didn't need the cash at that time, not gone through a process of releasing funds from restriction, and then found that they really needed those funds for the specific purpose, but they were not able to do so because releasing them from restriction would be in excess of what was allowed based off of their policy. So it's a great idea to continue to do that each year, and you don't have to move the funds out. You can keep them in, and you could, if you wanted to, you could leave them as completely unrestricted, or if the board wanted to, they could certainly add them to the board-restricted portion of the fund. So with all of this, we're very happy to answer questions on any of this. We're going through a lot of information pretty quickly, and this portion is certainly falls into that category. I wanted to talk a little bit about UPMIFA just so that everyone is aware that it exists and give a pretty high-level discussion of it. And again, these slides will be available through CLCC after it, so I'm not going to necessarily go into each specific part of this because I want to make sure that we have at least a little bit of time for questions. But so you all know, UPMIFA is the law that governs endowments. So it is now called the Uniform Prudent Management of Institutional Funds Act. Previously, it was UMIFA, And it was updated back in 2006 because they found that the rules that were included in it were very outdated. And even if organizations were managing their endowments in a compliance with the rules of UPMIFA, they were finding that that they were resulting in underwater endowments, which in that circumstance, what underwater means is that the fair value of the fund at the reporting date is less than the original amount or the amount required to be maintained by the donor, even though organizations were acting in compliance with UPMIFA. So they updated that law in 2006, and it was adopted by the Connecticut General Assembly in 2007. So it's been the law of Connecticut for quite a while now. And it uses slightly different language, but the concepts here are what we are all used to and comfortable with. So it defines an endowment basically as a fund where you have to keep a certain portion of it. You can't spend all of it. It's not wholly expendable. They use the term gift instrument. That's what we would talk about in terms of documenting the donor restriction. A key concept there is that the donor and the charity they have to be either aware of the terms or they should have been aware of the terms for that to be an enforceable gift restriction. And you certainly can invest your endowment according to that law. It's fine to be investing as long as you're avoiding speculation. It describes in detail a standard of care. These are all consistent with what our standard of care is as an organization that needs to exist in perpetuity. And again, here's this concept of the board is required to act in good faith and with care of an ordinary, prudent person, just as Rick mentioned earlier. And so as a part of this now, a charity is allowed to, the way they phrase it is to appropriate for expenditure so much of an endowment fund as the charity determines is prudent for the purposes for which the fund was established. So a part of that means that throughout the year, you may if you need to spend some of the funds out of an endowment, you are allowed to do so as long as it is prudent for the purposes for which the fund was established, and certainly that it doesn't go underwater as of the reporting date. And then these other things need to be considered. So the duration and preservation of the fund itself, the purposes of both the charity, so that's our mission, and the fund itself, what general economic conditions are, effects of inflation and deflation, the total return from the income and appreciation, your other resources, and of course, you have to make sure that everything that you are doing is consistent with your investment policy if you have one. Again, it's a great idea to have one if you choose to invest restricted funds. And this is consistent with what Rick said as well. A charity can release or modify a restriction if the donor consents in writing, but if that is not possible, if the restriction is unlawful or impossible to achieve, et cetera, a court can modify the restriction. And that may mean just working with the Attorney General's office, or it may, if they recommend, it may mean actually going to court. So that's a very high level of UPMIFA, but I went through that as quickly as I could to preserve a little bit of time for questions. So I think what I'll do is stop sharing my screen, even though those are some cute kids, my kids. And so I will take a look at the chat. So I think the only question that I see that came in on the chat, but Rebecca, correct me if I missed anything, is a question for you, Ann, about will Flanders be willing to share the restricted fund and gift acceptance policy?
Sure. The easy answer for that is yes, but I didn't answer it on the chat because I kind of want to discuss it with Amanda and maybe Rick. So the Flanders came up with its own, and it's really written from a development policy kind of thing. How do we encourage these gifts? How do we put them in the right places? It does not talk to restriction. Anyway, I'm curious to see your gift acceptance policy as well, now that I'm dealing with or hearing more about it. So yes, absolutely, I can share Flanders policy. That 2-page donor form, I ended up sort of breezing past that and not talking about it, but to me, it's the most helpful part of it because it basically documents with a signature and a date what gift came in what form, and for what purpose, if it is restricted. So that's the easy, simple part of it, and I absolutely will supply that. Would that go through you, Rebecca?
Yep, I think that'll be the easiest way. And if you don't mind us, what we'll do is we'll create basically a resources section for the session on our website. So if you don't mind us posting it on our website,
Sure.
that'll be what we plan to do. Thank you all for coming out. And I do want to make sure I say thank you to Amanda, Rick, and Anne for sharing your experience and your forms with us. Thank you all for joining us. And yeah, we hope to see you at an upcoming session. I will, as I said, follow up with an email with these resources. I can provide Amanda, Anne, and Rick, if you're comfortable, I can provide your contact information in that email as well. And other than that, enjoy the sunshine while we've got it. And I'm going to wish you a happy Earth Week one more time. So thanks.
Thank you, Rebecca.
Thanks everyone for coming.
Thanks, Rick and Amanda.